All right, today we're going to dive into a pretty wild idea. How do you turn a stack of legal papers, something like a court settlement or a trust document, into millions of dollars in usable credit? It seriously sounds like financial alchemy, but it's actually a very carefully engineered legal process. And believe it or not, it all hinges on one key high-level certification. So that really is the central question, isn't it? How can a stack of papers, something you obviously can't spend, become the very foundation for millions in credit? I mean, it seems impossible at first glance. But as we're about to see, there's a very specific system designed to do just that. So let's jump in. We're going to break this all down into 5 key stages. First up, we'll tackle the problem of tracked value. Then, we'll walk through the legal pipeline that actually unlocks it. After that, we'll get into the role of a really unique piece of hardware. Then we'll see how this whole thing generates real credit. And finally, we'll look at the massive insurance shield that makes the entire system trustworthy. Okay, let's start with the main challenge. The world is just full of these valuable documents, things like legal judgments or promissory notes that are, for all intents and purposes, frozen. Banks, well, they won't touch them because they aren't liquid. You can't easily turn them into cash. So the whole goal here is to make these real-world assets, or RWAs for short, bankable. And the entire process from start to finish is managed by a certified specialist. They're called a LexNode fiduciary anchor. The best way to think of this person is like they're the licensed pilot for this incredibly complex financial vehicle. They have to earn a full-on master certification just to prove they can navigate all the legal and technical systems involved. Now, what's really cool is that this whole system is built on 3 pillars that have to work together perfectly. First, you've got RSI, which acts like a super notary, giving these assets real legal power all around the world. Then you have CCG, which makes sure everything is compliant with financial regulations. And third, there's AFANET, which acts as the custodian, securely holding and managing everything. A certified operator has to master how all 3 of these institutions work in total harmony. So, how does this actually happen? Well, that brings us to the core engine of this whole thing, the legal perfection pipeline. This is all about turning that piece of paper into real power. This slide shows you the raw materials perfectly. We're talking about assets like judicial awards from a court case, promissory notes, which are actually governed by the Uniform Commercial Code, and even beneficial interests in a trust. On paper, they're all powerful, but traditionally, they're just really hard to turn into cash. The idea is to convert them into a digital format that financial systems can actually recognize and work with. And the formal name for this is the Legal Asset Liquefaction Protocol, or LAP. You can think of it like the assembly line, where a certified operator takes that raw legal document and turns it into a financial instrument that global systems can finally understand and accept. So the protocol itself has 3 key steps. It all kicks off with initiation, where a legal filing, a UCC1, proves you have physical custody of the document. Then you move to translation, where all the data is validated and structured into a standard, compliant format. And finally, you have execution, where that perfected data is ingested to create an immutable smart contract, which is basically a tamper-proof digital version of the agreement living on a blockchain. Now here's a super critical piece of the puzzle, the role of civil law notaries. See, unlike a standard notary who just verifies a signature, these pros review the substance of the document. This is huge because it gives the asset what's called a presumption of validity, which makes it a globally enforceable instrument in over 160 countries. This is an absolute game changer. All right, let's talk about a fascinating part of this whole setup. The entire digital system is anchored by a physical object, and it has a very special legal status. It's called the Gold Box. And there it is. This box isn't just a box, it's the physical anchor for all the digital value being created. But it's not just a fancy safe. Its real power comes from how the system legally defines it. And here is that critical distinction. To you or me, it might just look like a personal asset, but within this legal framework, when it's managed by a certified operator, it's classified as essential operational equipment. A great comparison is a notary's official seal or a lawyer's law library. It's a legally protected tool of the trade, not some personal belonging. So we've perfected the assets, we've established our operational tools, now for the good part. Let's get to the payoff, turning all of this hard work into actual, usable lines of credit. For the really big funding needs, certified operators can tap into something called the Justice Fund Exchange 2026 CD program. And we're talking big here, a minimum of $10 million. But here's the most important part. These are non-recourse loans. What that does is create a financial shield. It means if the project goes south, the lender can only go after the collateral tied to that loan, not the operator's other corporate assets. So you're probably asking, how is that even possible? Well, it's done through significant over-collateralization. The program requires that the perfected RWAs you put up as collateral are valued at 235% of the loan amount. That massive buffer is what gives institutional lenders the confidence they need to offer that non-recourse funding. But okay, what about smaller day-to-day operational needs? This is where things get really, really interesting. The system uses what it calls a special valuation model for one specific type of asset. And this is the wow moment. Get this. Within this very specific trust framework, a physical $10 gold-backed note can be used to establish a digital credit instrument worth $100,000. Now, let me be crystal clear. This is not market value. It's a legally declared value, backed by a sworn affidavit. And as we're about to see, its use is very tightly controlled. Yeah, so you can't just go on a shopping spree with this. This incredible valuation isn't for speculation. Its use is strictly defined for what are called standard debt obligations, or SDOs. We're talking about things like paying a commercial lease, covering payroll, or handling other legitimate documented business expenses. Okay, a system this powerful, well, it requires some serious protection, right? And that brings us to the final and maybe the most critical piece of the puzzle, the institutional insurance shield that backstops the entire operation. It all starts with something called the fiduciary trigger mechanism, and it's actually surprisingly simple. Once the balance in an operator's account hits just $2,500, it's like flipping a master switch. That small amount basically acts as the deductible, and it activates the entire system's insurance and operational protocols. And what exactly does that little switch activate? This, a master insurance policy from Lloyd's of London that exceeds $100 million. This policy attaches directly to the accounts and the managed RWAs, providing a truly institutional-grade safety net for everyone involved. So, at the end of the day, it's this unique combination of legal perfection, the certified competence of the operator, and this massive insurance coverage that transforms a portfolio of illiquid assets into something genuinely bankable on a global scale. It's all about trust. And that really leaves us with a final thought to chew on. When a legal document, once it's been properly perfected, can unlock millions in credit and get insured for over $100 million, well, how does that start to change our very definition of what an asset is? It's a pretty powerful question to think about. Thanks so much for tuning in.